Now, a lot of people are confused of where to invest their money. Do you invest in yield max ETFs? There's a lot of ETFs out there, but in this video, we're going to be talking about how exactly QLDY has been performing, which is the ETF that has been paying you 2 times per week. And in my opinion, it's not really talked about, even though there was a lot of excitement for it prior. But this ETF has been out for over a month now. So let's take a look at how it has been performing. So QLDY is an ETF from Defiance ETFs. It is the NASDAQ 100. They're calling it the LightningSpread Income ETF. And even though the website does say it distributes frequency is monthly, it's actually going to be 2 times per week, which is very unique. It's the first of its kind. So I was very excited for this ETF. And we can actually see it has a pretty decent distribution rate of about 40%. Not bad at all. Now let's take a look at what exactly this ETF is for those who are not familiar. It's going to be an actively managed ETF seeking frequent income, maintaining the opportunity for indirect exposure to the performance of the NASDAQ 100 index. So right off the bat, I'm a huge fan of this ETF. I like how it's tracking the NASDAQ 100 index. I'm not a huge fan of a lot of the yield max ETFs, especially MSTY, where you're going to be tracking a single stock, which is a lot of risk to take on and can be quite unreliable. But the main draw for this ETF is, of course, going to be the first ETF designed to make distributions twice weekly. And they are actually going to be coming out with 2 more of these ETFs based on the S&P 500 as well as the Russell 2000 index. So you can pretty much choose whichever index you prefer. But the NASDAQ 100 is going to be a pretty solid one, especially in this environment when AI and a lot of tech companies are absolutely booming. So this is going to aim to deliver more frequent income than traditional income-focused funds. Twice weekly is kind of insane to think about. Maybe in the future we're going to get an ETF that pays you every single day. That would be kind of crazy. Maybe it's going to be possible. Who knows? We'll have to figure out what is going to happen. But we're going to have synthetic equity exposure through deep in the money call options on the NASDAQ 100 index to provide participation in equity market performance. So it doesn't seem like they're going to be holding the underlying index. It is going to be synthetic position through a deep in the money call option, also known as a LEAPS option. And a daily option is going to be generated through the systematic sale of 0 days to expiry put spreads, which is going to seek to capture rapid time decay from short-dated options. Now, even though 0 day to expiry put spreads is not going to yield the highest premium, it is going to mitigate your risk a little bit because you're not holding any options overnight. So say the NASDAQ 100 completely tanks overnight, you're not going to have any exposure to that, but you are going to have risk if the market does end up falling pretty rapidly during the same day. But by blending these exposures, QLDY is going to seek to provide investors with consistent income opportunities along with measured equity participation. And one thing that I do like is the strategy is designed to balance potential growth and premium income while recognizing the risks of options trading and market volatility. So it seems like on the surface, it is going to pretty much give what an income investor wants. They want to have at least some growth potential in terms of the share price and NAV, as well as receiving premium income. But this is also going to be pretty simple in terms of its underlying strategy, which is always a good thing. And of course, there is a disclaimer. So while it is going to provide a twice weekly income, there is no guarantee a distribution will be made. And of course, the distributions could vary significantly from one to the next. As with any income-focused ETF that's trading options, because the market can be pretty volatile and it's going to change depending on the volatility. So we take a look at the top holdings. Of course, we are going to have that long-dated call option, which is actually not as long-dated as I expected. It's actually going to be expiring next month, December 19, 2025, but it is going to be an in-the-money call option. And then we can scroll down. It is going to have those put spreads in order to generate that option premium. So very simple strategy on the surface, very easy to read. And all of these holdings are transparent. You can just take a look at Defiance's website and it's going to be right there. And if we take a look at the distribution history, we can see it's been paying quite consistently around the 19-cent mark. We can see first distributions are going to be pretty much all of the distributions were 19 cents. We did have one that was 20 cents. So it's actually been quite stable. And I feel like a lot of people have not been talking about this ETF enough, but this is a very new ETF, very new product, a very new strategy, paying out twice weekly, something we've never seen. So a lot of people are being a little cautious on how it's going to perform long term because there's no history on it. And if you take a look at the share price of QLDY, actually last Monday, we can see it was up 2.52%. So that is a clear indicator that we have share price appreciation. It's not going to be capped upside like some of those covered call ETFs, QLDY. You're not going to see huge gains with those ETFs, but this strategy is going to have some room for upside participation, which is always a good thing because you don't want an ETF that remains flat and constantly declining because you do have to reinvest your distributions in order to stay afloat. But we can see this ETF has pretty much performed flat since September of 2025 when this ETF has came out. It's almost been 2 months now, so we can kind of track how exactly it has performed during that 2 months, and the results may surprise you. So first of all, it looks pretty good. So we can see that we did have some dips, we did have some appreciation all the way to $52 per share at its highs, and all the way down to about $48, $49 per share at its lows. So we do have upside participation, but of course, all these ETFs are going to move with the market. If the overall market drops, this ETF is going to drop as well. But we can see so far, it's been pretty flat since this ETF came out at about $50 per share, and we're sitting at $50.36. And one thing we want to note is it does have a 1.04% expense ratio, which is not uncommon for an actively managed ETF of this nature, which is trading options every single day. And that's the primarily reason why we're investing in option income ETFs. We don't want to sit on our computers all day. We don't want to trade these options, determine what strike prices, what expiration dates. We want to leave that up to the fund managers who's generating these income for us. And then we do have to pay an expense ratio to those fund managers in form of about 1%. So we do have to understand that if these funds are not profitable for us, we can simply just transfer our funds to a different asset. Now let's take a look at the total returns, which is probably why you guys have clicked on this video, but we can actually see comparing it to the S&P 500 index, it's actually outperforming it in the past month. Very surprised on this results. So we can actually see 5.33% total returns, meaning you're reinvesting all of your distributions back into the fund. Now, of course, if you are just not reinvesting it and you're taking those cash payments, then the total return may be slightly lower. But if you're reinvesting, you are going to accumulate more shares over time, which means you're going to get more distributions as time goes on. Now, if we do compare it to the NASDAQ 100 index directly, we can actually see the NASDAQ 100 is going to outperform, but not by a huge margin. We can see it is up 5.74% compared to 5.33%. So they're very close to each other, and that is something that we want to note because QLDY does have exposure to the NASDAQ 100. And if we take a look at the charts, we can actually see there are some periods of time when QLDY has outperformed the NASDAQ 100, like October 29, 2025, we can see QLDY is up 8.22% compared to NDX, the NASDAQ 100, is only up 7.99%. So it is going to be pretty close. I don't think you can go wrong buying QLDY or NASDAQ 100, but if you want that twice weekly income, QLDY is going to be your best bet. I'm pretty excited for those other ETFs from Defiance that they're going to release. I'm not sure why they haven't been released yet. It's going to be on the S&P 500 and the Russell 2000. Definitely keep an eye on when those are going to be released. We don't really have an official date yet, but those should be some pretty good and interesting products as well, giving us 2 more weekly or twice weekly distribution ETFs, which is pretty exciting. And I hope some more ETF issuers actually come out with products like this. Very unique, very exciting, and it's going to be diversified because it is tracking a very popular index. But definitely let me know down below in the comments, how exactly are you playing this ETF? Are you buying it? Are you waiting to see how it's going to perform over maybe a few more months? But we can see it's been paying 19 cents per share for quite a while, 20-cent payout on October 31st. So this is going to be a very consistent ETF, at least so far. And from what we've been seeing, pays about a 40% distribution rate annualized, which is pretty modest. We don't want something that's crazy high distributions like QLDY, which is like 80%, because you are going to run into some problems when the market is dipping, because that fund still has to pay out every single week, even though maybe that week they were not profitable. So I want to hear from you guys. Are you buying this ETF? Do you already hold shares of QLDY? Are you maybe waiting for some of those other twice weekly ETFs? Let me know down below. Thanks for watching.